All right, so to take us through all the action, there's plenty of it given the market turmoil and of course the launch of those ETFs and what's going on with those stablecoins and more. We're joined by Ian Lowe from Dacxi. Ian, a very good day to you. It's hard to keep up with all the news at the moment and just what's going on. Why don't we start, in fact, with the stablecoin. Interested to get your view on stablecoins at the moment, given what's going on with TerraUSD. What do you? Is this pose a significant threat to those other stablecoins, such as Tether?
Yeah, hi Andrew. Good to talk to you. Well, look, it's important to understand. I think that there are very different flavors of stablecoin, and whilst we've seen huge issues in this area in the last couple of days in particular, others that are pegged one-to-one to underlying assets are actually holding up really well. They're staying on price parity as it relates to being geared to the US dollar, for example. So we're seeing examples of high-profile stable coins holding ground where they've got a one-to-one backing. I think where we've seen issues in the last couple of days is really where there's a very sort of clever algorithmic premise to that stable coin, and what appears to have happened is that the market has caught up with that, and it's, at least for now, it's Armageddon or something close to it for them.
But of course the problem is too, there's huge collateral damage by this, given there's so much at stake for many of these other companies that are exposed in that space.
Of course, absolutely. I think what this, the shakeout that we're seeing at the moment will have the effect of, a lot of the long tail of the crypto market will be significantly challenged. I mean, whilst we're seeing varying degrees of price movement across the spectrum of cryptocurrencies, they still, by and large, as a generalization, move with the tide up and down. So the whole market is obviously under pressure at the moment. The long tail of crypto, I mean, there are thousands and thousands of these cryptocurrencies, and the long tail, which has really been, traditionally the home for the speculators, they're just going to get rubbed out through this period. And look, we don't yet know if we've hit a price floor. I think that'll become clearer in coming days and weeks. So we may go through a protracted period yet of difficulty for the market, but what that will do is shake out, some of the pretenders or less substantial businesses. I think, look, it's also worth noting that in our wealth platform, we've seen most investors look at this as an opportunity to lower their average cost of ownership on the primary coins. So those that are doing dollar cost averaging are holding firm and seeing this as an opportunity to get the average cost base down on their position. So that may change, but it's interesting to see that that those that have a medium to long-term view, a number of those investors see it as a buying opportunity.
So is this perhaps the clean out that was needed? You refer to so many of those other altcoins. There are literally thousands of them that finally will get that shakeout that has been spoken of.
Inevitably, I think a lot of them will get shaken out, and I think the price floor we ultimately get to, and the period over which we then see the market requires to get to recovery. I mean, it's either going to bounce back, reasonably quickly, or it won't. In which case, we could be in for a protracted period. In which case, more and more of these long tail coins will just simply disappear. They become unsustainable.
And what threat is posed to, talk about the collateral damage there, we're looking at companies such as Coinbase and so on under significant threat at the moment, given those exchanges, the brokers, the investor houses that have so much exposure here. Are we likely to see some go under, do you think?
Oh, look, that remains to be seen. Not all of those businesses have transparency on their balance sheets, so where they land at the end of this remains to be seen. But I think what this will do is inevitably encourage those calling for regulation, which, by the way, is for the most part the industry itself is leading that call. It will encourage them to shout more urgently and shout louder. Because in the end, that regulation is good for all, in particular the everyday investor.
Ian, it comes at an interesting time given we've had the launch of those ETFs here in Australia. What do you make of that timing? I mean, you can't pick it, but nonetheless, what sort of appetite is there going to be for those ETFs?
Well, I think the institutional appetite is good. As a regulated instrument, an ETF gives the institutional community an entry point that's much more attractive than owning the underlying asset. But of course, there's a certain irony to that, in that the underlying assets are not fully regulated, but the instrument that represents them is. So the question really remains, what sort of protection does the investor that holds the ETF actually have when the underlying instrument is not yet fully regulated? And I think in the end, it's not really about, for the institutions at least, it's not really about the protection so much as it is saying, well, we can tick that box and now we can participate. Whereas in terms of investment mandates, etc., a lot of those funds in particular would otherwise not be able to participate.
Now, given all this news that's going on and the drama in markets, we've been distracted by that. But I know you did also want to talk about tokenization and the opportunities there, particularly as it applies to self-managed super funds and I guess more broadly the super industry. And whether perhaps we're seeing a setback right now, and a lot of those institutions, of course, are going to balk at going down that path right now.
Yeah, so we're at a very, very interesting point in the evolution and broader adoption of what we would describe as digital money. And it's just worth remembering that cryptocurrency is really only the entry point into digital money. And so the analogy is that in the same way that digital media in all its different manifestations, the entry point was the .com era, really crypto is analogous to being the .com period for the emergence of the internet, which now powers so many different aspects of our lives. So cryptocurrency is the entry point. The underlying innovation of blockchain will drive a much bigger opportunity around tokenization. And tokenization is just very simply a digital representation of an asset that is non-digital in many cases. So we're seeing the tokenization of property, including commercial property, the tokenization of things like private equity, investing in privately held businesses, the tokenization of carbon credits, the tokenization of precious metals. All of these asset classes are now becoming directly available to the investor. And so, I mean, the AFR have talked about this being a $24 trillion industry by 2030 globally, which of course puts the crypto industry into perspective in terms of scale. But I think the disruption that this drives is going to be felt most significantly by traditional wealth businesses, where the black box of what they provide is going to be sort of broken apart by virtue of the fact that tokenization will give everyday investors direct access to the asset classes they're interested in. And they won't necessarily be reliant on the wealth business, which is the intermediary, to demystify that world for them. So advice will remain important, but in terms of how do I actually participate, how do I get access to different asset classes and take a position? Well, tokenization is simply going to make that incredibly easy for the everyday investor. So we saw disruption in wealth off the back of the Royal Commission and some of the self-serve platforms. but they're really still in the end investing in the same types of asset classes. What we're going to see in the next generation of disruption is much more significant. This will be structural level disruption where investors will have direct access to all of the asset classes that they want to invest in and the tools through which to actually manage their investment strategies. And so in combination with financial advice or investment advice, a lot of those traditional wealth businesses will be disrupted, in a very material way. And perhaps that's why we're seeing so much M&A in that space at the moment, particularly here in Australia, is that disruption, I think, is recognised by the leadership of a lot of those wealth businesses, and so they have a couple of options, which is to innovate into that new realm, or perhaps divest those assets. And look, if you look at the superannuation industry as a subset of the wealth industry, this is a $3.5 trillion industry that is allergic to innovation. All right, this is an industry where everyone gets their bonuses as long as they don't fall below average. So I think their ability culturally to innovate in a way that will allow them to account for the disruption of tokenization, I think that's very limited, but time will tell.
Yeah, of course, easy to get distracted by some of those tokens themselves, the coins, as we're seeing right now. But fundamentally, you're talking about this revolution that's afoot, not just for finance and investing, but more broadly as far as blockchain technology is concerned.
That's exactly right. So having a position in all these other asset classes, and that's represented in a digital token, you own the underlying asset in the same way that you would have otherwise. But I now have direct, frictionless access to those asset classes in a way that previously I relied on an intermediary to manage that for me.